Go ahead and do this. What's going on, everyone? It's Caddy with Money Investing. So it is absolutely crazy out there. Let me know in the live chat if you guys can hear me without any issues. I just want to make sure that everything is working okay. And oh man, it is just fantastic. What's going on, Phil? What's up, man? Love it. Love it, love it, love it. Thank you so much for joining in. How many times? But yeah, I mean, this is a market correction, and of course, tech and growth, and a lot of stocks pretty much are just like struggling to find ground here. All right, let's take a listen to this really quickly.
Yeah, the euro's been pretty strongly. The dollar's down today. It is an unhealthy market. We are seeing some of the healthcare stocks certainly being hit pretty hard. Farmageddon, I'm pretty sure that was a movie at some point.
That's Armageddon with Bruce Willis.
No, I'm sure it was with Shaun the Sheep, but anyway.
It's an asteroid to Earth.
The European close is coming up next. We're going to have an interview with the Governor of the Bank of England. That's next. This is Bloomberg.
So, what do you guys think? What's going on? Is Doge going to the moon here? Let's take a look. So let's go to some cryptos here. It's Doge at 61 cents. The anticipation is about $1. We'll see that, you know, when Elon Musk does come up on SNL. But yeah, I mean, if you look at any stock right now, it's just straight up, it's just struggling to find ground here, right? So let's take a look at the watch list. All right, so the ones on green right now, we've got DE, John Deere, Peloton kind of bouncing off the lows from yesterday. We've got PayPal after strong earnings from yesterday up a little bit over 1.5%. Caterpillar, one of those value cyclical plays, up over 1%. AMC is up over 1%, but that's about it. Like, the stocks that are in the green, they're up 1%. Let's take a look at energy very quickly. Pretty much red. Oil prices are coming down. We got Chevron down a little bit, close to 74 basis points. And ExxonMobil is also down about the same. Let's look at some of the banks. So financials are doing well, right? PayPal is the only one, actually one, fintech that's up. JP Morgan is up over 75 basis points. We got Berkshire Hathaway. Citigroup, Goldman Sachs, Wells Fargo, Bank of America, they're up like somewhat in the green. So they're still up there a little bit. But let's take a look at some Dow 30 stocks. So we got Nike, Verizon, Coca-Cola, Boeing. But again, I mean, they're not up by a lot. They're just like in the green. That's it. But if you look at some of the ones that are in the red, especially in the growth sector, it is just crazy. So Amazon, Facebook, and Apple, like three of the companies that we have covered in the past, they are somewhat in the green. With Visa a little bit up over 9 basis points, but then everything else down here, we got Netflix, we got Qualcomm, we got AMD, we got Nvidia, we got Twitter, that's down another 1.5%. We got Baidu, Tesla down over 1.8%, close to 2%. Spotify continuing on that sell-off here. Neo down a little bit over 3.6% after their press conference with the European expansion. The market is just punishing pretty much every single company, regardless of what the fundamentals look like, regardless of what the news are looking like. So we've got Shopify, Fiverr, Square down over 3%, Shopify down over 3%, and Corsair is down over 4%. So that's the thing. Like, if you look at Corsair's chart, I mean, you know, yesterday the stock went all the way to highs of, you know, $36 after a great earnings report. You know, strong growth, strong future guidance, and then we are back down. That's kind of like been the trend, is that the market has been more prone to taking profit out versus staying invested, right? That's kind of like been the biggest reason. Of course, you know, with Wall Street and hedge funds seeing the biggest outflows that we've ever seen in a long time. So they've been net sellers, so to speak, and retail investors have been net buyers in the markets for the last several weeks. But we just haven't seen that continuation, right? I mean, in a normal market, you'll see the earnings kind of push stock prices higher and then a follow through the following days. But that just hasn't happened, right? It's just we've seen a lot of stocks roll over, days following up into like after the earnings. So, and then Enphase down over 4%. Very, very, it's just too oversold at this point and very, very strong like buying opportunities for these companies. We got Palantir down over 4% now, just trying to stay above $20. Like the last time we were trading at this level was back on March 5th, at lows of $20.18, and the low for the day was $20.14. So we're just kind of like hanging on to a thread. And by the way, like, good morning everybody. Thank you so much for joining in. I hope you guys can see the screen okay and hear me without any issues. So you guys can. There's no any technical difficulties, but I just want to mention that we were here back in February and March, right? If you guys have been part of the channel, we've covered a lot of tech and growth stocks, including like the big tech and FANG names, and we went through the same time period like in February and March. We recovered by a lot. Mark, thank you so much for joining. I really appreciate your support. And we recovered in the month of April, right? So April has historically been the month that we've outperformed very, very extensively. Let's take a listen to this very, very quickly. So,
breaching that 200-day moving average. So everyone's kind of watching that for the appetite for risk in the market. Are we seeing a mini top? Is now sort of the question. The interesting thing, though, Guy, is we had Robert Kaplan, the Dallas Fed, talking about he doesn't know whether or not inflation is temporary or persistent, and bond yields in the dollar just did not care at all. The 10-year yield, 1.5 is where we stay. Inflation expectations, though, continue to kind of heat up within the market. And for your commodity fix, oil might be trading a little heavy, but iron ore at one point trading about $200 a ton. Will break that down even more in terms of what that means for steel input and then what that means for companies as well, Guy.
Absolutely. That inflation narrative front and center for central banks around the world. Let's talk more about actually what's happening with the Bank of England. No change in interest rates, no surprise there. Nor to the asset purchase target, but as I mentioned, basically it's going to elongate that process, slow down the bond buying and let it last a little bit longer. Economic forecasts have been significantly raised. Bloomberg's Emma Chandra has all the details.
Guy, as you mentioned there, of course, no change to interest rates and staying at those record lows of 0.1%. But as you alluded to there, the change came in that pace of bond buying. That will be slowed now to some £3.4 billion a week. That's £1 billion less than the bank was spending up until now. Now, of course, the governor of the Bank of England, Andrew Bailey, asked about this during the press conference, and he said this is explicitly not a tapering decision. And officials calling it operational, saying this is not a policy shift because that total target for bond buying will remain at £875 billion. But it wasn't a unanimous decision. We heard from Chief Economist Andy Haldane, who actually steps down next month. He voted in favour of reducing that target by some £50 billion, citing the strength of the UK.
So Danny, I love that comment from you. It's weird because I'm 26 and I see these as great buying opportunities because for the long term. So I couldn't agree more, right? That's exactly what it is. And on the Discord message this morning, I basically addressed this idea that the market it's a tough market right now, right? And this is not the market, in my opinion, to day trade or swing trade, so to speak, unless you're getting those specific opportunities, but instead to accumulate those positions for the long term on your high conviction picks, right? Companies that have great fundamentals, strong fundamentals, great balance sheets that are going to survive regardless of what the market environment is, that have a very strong tendency to generate a lot of cash flows in the future. And that's what we're going to focus on, right? We've always looked at the companies from a holistic overview, the fundamentals, valuations, and the stock price, again, is not the company, right? The company is not the stock price. We've discussed this. And this is very normal. This is, again, I know it can be very frustrating in the moment, but trust me, this is, when you see those companies being down, like Palantir is about to break down below 20, it can be very frustrating. But over the long term, like if you guys believe in these companies, if you guys want to invest for the long term, that's kind of like the mindset here, right? We're not here to speculate short term, but we're here to invest in really strong companies over the long term. That's kind of like my basis of why I want to invest in these companies. So Market is so garbage right now. NEO has so much great news out there, and yet here we are with this nonsense. Dumb, yeah, that is the market, you know, that's the market. It plays with your emotions so much. And of course that has to do with, you know, the outflows we've seen with the hedge funds. I think it was dating back from like 2007, 2008 for a really long time. We saw like the biggest outflows from the markets. But nonetheless, I mean, this again represents strong buying opportunities in my opinion. If you are, you know, deploying cash in the market. NEO is down a little bit over 3%. Natasha, thank you so much for that. I really appreciate you. You know, we had the press conference. They expanded into Europe. They've got NEO houses, first NEO house that's going to be built in Oslo. And the deliveries for ES8 are going to start in September of this year. And then next year in 2022, they're going to start deliveries of the new ET7 sedan, which is their flagship sedan. So that's kind of like the whole gist of NEO. Let's take a look at NASDAQ here very quickly and where that's trading. So we're probably trading below the 13.6 level. So yeah, we did break down below 13,600, the support level that we were talking about, and kind of like we were in a dilemma, so to speak. Yesterday's market update, I mentioned that we're kind of like in a limbo. The market's still trying to decide whether we're going to see a breakdown or not. And if we do, wouldn't be surprised if we get a flush all the way down to 13,000, right? That's going to be the level to watch moving forward for the NASDAQ. And then for the S&P 500, we should be coming down to 4,100 here very soon. So again, 4,157 is going to be the level to watch here. And you know, here's the thing. Like if you look at the S&P 500 and what's actually driven the markets higher. So let's take a look at the select sector index. So this is the index that we have covered in our previous videos. So let me take a look. So this is the chart that we have kind of looked at in the past, right? And what's driving the markets higher. Energy financials have been up there pretty consistently. So year to date, you'll notice some of the value plays, cyclical plays. So energy financials, really what's driving the markets higher. Energy is up over 36%. Financials are up over 27.5%. And then you really have to understand when the S&P 500 is going up, and it's going up on energy and financials, once those sectors start to pull back and then other sectors also consolidate or don't perform, the broader markets come down. But when we have energy financials go up and the NASDAQ, the tech stocks, or basically technology, and you've got, you know, materials, utilities, healthcare, some of those other sectors come down, that basically gives it a null effect, right? We're not going up or down. And that's what we're seeing with the S&P 500. It's just going sideways, right? Over the last, I want to say, since April 23rd, you'll notice that we haven't really moved much. We've just been going sideways. So many doji candles on the dailies here. We're just going back and forth, back and forth, back and forth. And when energy financials pull back after this huge run-up that we have seen, and all these sectors underperform, that's when we see a little bit of a pullback here, right, for the broader markets. CPI report comes out next week, so yeah, that's going to be very, very important. It'll give us a good understanding of what inflation data looks like. Of course, there's a big debate whether that's even accurate or not, but it's still everything that we have. Like we can't really go out and start measuring all these different commodity prices to gauge where inflation stands. It's the only report that we have access to, and of course that's backward looking. But again, it's what everybody looks at. It's what the market discounts and prices in terms of inflation data. So I'll be taking a look into that, and I'll definitely go over that as well. And the bond yields are pretty much down today. So if you take a look at the US 10Y, so it's down close to 45 basis points. So we're pulling back on the yields, and that's also not helping with the broader markets, right? So it's still pulling back. Palantir just broke down below 20. Yesterday I put out a video on Palantir basically going over the real test. Like that's the real test for Palantir, is whether we're going to see the $20, 21 kind of like validate today, or if we're going to see a breakdown below those levels. So, you know, that's the real concern here, is that we're continuing to see these downward channels get filled in. And Palantir, once again, is almost on the verge of breaking down below $20. And that's obviously not the best thing. So Phil here says Tesla at 600 tomorrow. Where is it trading right now? Let's take a look. So Tesla at 652, down about 2.72%. So yep, we're just breaking down below this uptrending channel. And that's the thing, like, you have to understand, like, this is something that we had covered. Logically speaking, again, this is just very, very normal. When these valuations come down, at what levels are you going to buy a Tesla, right? At what levels are you going to start buying Apple or Square or Facebook? At what valuation, so to speak, are these stocks going to become really attractive to you? That's my question, right? Because they're not going to go down forever. Like, I've seen comments, and of course this comes out when every stock is selling off, is because there's a lot of FUD in the market, and people want you to believe that Tesla is going to be at 200. People want you to believe that NIO is going to go down to $10, right? And that's the FUD that I'm referring to. But we have to really ask ourselves, logically speaking, at what valuations are the hedge funds and the big money going to jump back in, because those valuations become really attractive once again. Right now, yes, you can make an argument if you've got a bearish thesis on the market that the valuations are sky high, and the criticism is that we're trading at much, much higher PE ratios than historically. But my question to you is, at what point after the sell-off are the valuations going to become really attractive for you to jump back in, right? Tesla under 600 is going to be trading at a valuation of less than, I want to say, 600 billion. To me, that's going to be super attractive for a company. NIO, same thing. Apple, Amazon, like, for example, great earnings, great growth across the board. AWS, advertising, like, you name it. They had incredible numbers. So did Apple. So did Microsoft. So did Google. So did Facebook. So did Nvidia and AMD, right? AMD. What number is for AMD? How much lower does it have to be for the suits to basically go, all right, it's too cheap for me to not invest in this company, right? So that's kind of like the logical game here that we're trying to understand, is that once it's down a bit more, I'm going to jump into the triple leverage FANG ETFs. That's not the worst strategy, because the upside potential is that much bigger, because when tech sells off, these ETFs like FNGU, for example, sells off aggressively. Like, it's down a little bit over 3.5%, but over the past few days, you'll notice that tech maybe down 3 or 4%, and this ETF is down close to 20%. So that's the leverage piece behind this ETF. $25 would be the support level that I would watch for this one. Yep. So that's going to be the level to watch, but a lot of stocks, they're just like straight up down. Let's take a look at Webull here to really understand what's going on. So there's not a lot of green right now, except for Wayfair, which is up a little bit over 4%. Just refresh that. So Wayfair was up over 4%. We got VIX almost at 20 levels. So we're seeing a little bit of a push higher from the volatility. Again, 24, I think 24.5 is kind of like the level that we've talked about. Remember when AMD was at $2? Phil, that's right. AMD was at $2, and they've progressed a lot, like in terms of the business and the underlying value that they have provided over the years with the new management. Their balance sheet has improved. Their revenues have improved. They've gained market share over the years. TJX up a little bit over 70 basis points. We got Wells Fargo up over 77. JP Morgan. So pretty much banking is what's up a little bit. FinTech for PayPal is the only one after the earnings report. And then other than that, I feel like everything else, look at this, just complete bloodbath here, including airlines, cruise lines. We got tech, growth, blockchain, Mara and Riot's down over 7%. Let's take a look. Lemonade is down over 8%. Jeez. BNGO, I know that's a pretty popular name. It's down over 7.76%. See, I mean, things like this, they secure a new patent in the US and they're still getting, beat hard. Like, if you look at the daily chart here, I feel like it's been just coming down pretty aggressively, for bionanogenomics. And then we got DraftKings down over 7%. They've got earnings coming up on Friday, so tomorrow they're going to be reporting. Coinbase is down over 6, now down to 255. I think that's the lowest if it's ever been. All right, let's listen to this really quickly. This should be interesting.
We front-loaded it somewhat because back in November we were in the midst of an upsurge in COVID. We were concerned about, financial markets situation, the performance, and ensuring that financial markets continued to be robustly performing. So it made sense in terms of market efficiency to front-load it. We've now got to a point where we think it makes sense to now move back to a flow that meets that eventual target.
And you've made that very clear. Given how the markets initially reacted, what does it tell us about market positioning or market exuberance, or how much focus will be on any signal on tapering?
Well, I fully expected, I can tell you, I fully expected we'd be having discussions like this because, it's reasonable for markets to ask the question. And of course, there is this point about bringing out the difference between open-ended and fixed QE programs. They are different in that sense.
So, what are your expectations for QE next year?
I don't have any expectations at the moment at all. I mean, because the decision we took today was to say that the current policy setting was appropriate.
But what kind of trend are you expecting? If you look at your forecasts, right, they're built on 2 rate hikes over the next 3 years, and that has inflation just at target.
Yeah.
Is your next move tightening?
Well, we don't, of course, our forecasts don't validate the markets in that sense. We use the market profile to construct a forecast, which is then, used in the policy process. What I would say is that it's quite interesting when we also publish a constant rate forecast conditioned on constant rates, i.e. the current setting of policy. I mean, the difference in inflation terms at the terminal point of the forecast between the market path and the constant path is pretty small, in fact, in inflation terms. So I wouldn't overinterpret the point about the market curve, but just to reemphasize, it's a convenience for us to use the market curve, and I think it's helpful, but it does not determine policy in the sense that it's not mechanical.
How do you manage market expectation? Is that something that you worry about given where we are?
Well, obviously we do think quite hard about, how policy will be interpreted in that sense. We watch very carefully how markets do respond to it. But at the end of the day, as I say, it's one input to our policy-making process. It's by no means the only one. And just to re-emphasize, we're not validating the market.
So QQQ is continuing their slide a little bit. We're seeing a little bit of a recovery here, though. And the SPY just all down a little bit over 25 basis points. All right, let's take a look at some of the other ARKETFs here. Oof. Let me add the ARKX. So that's doing relatively decent than all the other ones. So the space ETF is only down about 0.5%, considering, but it's been down since its IPO. Like it went up all the way to highs of 21, and we are down close to 6%. But everything else, the biggest loser is going to be ARKW for them. ARKK, of course, their flagship ETF, which has also seen like the most outflows, and it's down a little bit over 33%. Fiverr earnings, I have broken it down in one of my previous videos. You guys are more than welcome to watch that. So Fiverr down a little bit over 3% pre-earnings. We got Shopify now trading all the way as low as 1,070 levels. Watch that support for Shopify close to 1,070, although from a technical standpoint, it seems like a lot of support levels are getting broken because there's a lot of accelerated selling pressure coming in, especially from the hedge funds, right? That's what we're seeing. this is a crash. I don't think so. I personally don't believe this is a crash. For it to be a crash, the broader markets have to pull back a little bit over 20%. A correction territory is over 10%. So very quick metrics just for you guys to remember moving forward is that if the broader markets, including the NASDAQ and the S&P, pull back over 10%, that's when we see a correction for the markets. If they pull back over 20%, that's when we see it being labeled as a crash. Right? If you see a 5% drop, that's more of a pullback or minor correction use, so to speak. But crash would be over 20%. Of course, those individual stocks can come down however much they want, which is why individual stocks sell off a little bit more than how much the broader markets come down. But in my opinion, this is not a crash just yet, but it's simply like a pullback right now we're seeing. And if you go over to this, again, 13,000 is a level to watch moving forward because we did break down below this uptrending line, this uptrending channel. And even if we do come down to 13,000, that's going to be a drop of close to about 8%. So not quite a correction, but just like somewhere around 8 to 10% is what we're going to see. Which is why, like, if you've been part of our Discord and Patreon, like this right here, when we were pushing higher to new all-time highs, we were talking about how it's becoming overbought, right? This is, and we talked about how, I'm going to be personally raising more capital, raising more cash. I'm not buying or selling anything here. I'm just simply observing the markets because the risk reward is not quite there yet, right? We're seeing a push higher. And the RSI, the MACD, once again, we were seeing some bearish divergences, the negative divergence here, the RSI coming down to its support, and the MACD just crossed below the signal line. And when you take a look at the S&P, we were kind of flattening out, again, because of energy financials keeping the markets higher. So if they do pull back, and if tech sells off, that's when the S&P will also pull back with it. And of course, the RSI, the MACD were once again at near overbought levels. So it's very normal. Again, hindsight 2020. It's sometimes that you want markets to pull back so you can buy those dips, but when they are pulling back, we're not in the moment thinking about that. But all right, let's take a look at here. So BRAG says my entire portfolio is down 50%. 50% is quite a significant number. I would highly encourage you to kind of evaluate kind of your portfolio concentration and which stocks are down the most and whether they fall into like your high conviction picks or are they what do their fundamentals look like, what do their valuations look like, are they more speculative in nature, are they more volatile in nature, kind of reevaluate that and really combat that, kind of consolidate your portfolio if you can, so to speak, because this, again, I wouldn't be surprised if we do see some more weakness from the broader markets, right? And if we do see that, then individual stocks are going to have some weakness in the short term, right? They are going to get hurt. That's just plain and simple. But this is just the market we've been, right? 2020 was a phenomenal year for pretty much everyone, but 2021 is just the complete opposite so far. Correcting since February. I personally think that there was a correction in February and March. You're right. April was a strong month for a lot of companies. We recovered. The NASDAQ recovered. The S&P 500 recovered. So it's just plain and simple here. You'll notice we were here on March 24th. So this is how much we've gone up, over 8.7% in the S&P 500 from March till May. If you look at the NASDAQ here, again, we went up coming in from March 8th. We had a little bit of pullback here March 25th. But we went up the entire April. The NASDAQ was up over 11%. So the correction did happen, in my opinion, but we did see some type of a recovery, and right now we're seeing another pullback for the broader markets. And of course, those individual stocks are going to get hurt as well. So Palantir, they're also going to be reporting their earnings next week on May 11th. We're seeing a pretty significant sell-off here for Palantir as well, and there's a key support level that's being broken right now, which is why yesterday I put out a video, going over that's the real test that we need to understand for Palantir is if we're gonna hold up above 21, that's the green rectangle here, or if we're gonna see a breakdown. So and again, ARK Invest bought some shares on Tuesday after the sell-off for Palantir. We've seen a more aggressive selling pressure here, and now we're trading at valuations which $37 billion market cap, and their expected revenue for 2025 is $4 billion. So $4 billion off of a $40 billion market cap. That's 10 times price of sales that they're trading 2025, right? Way into the future, and that's what the market is not liking right now. But this is a long-term pick for me. This is a long-term company over the next 5 to 10 years. And that's another thing that I want to address is that if it's a long-term play, we can't expect these stocks to push up, over the next few weeks or few months. It's going to take some time. You have to be very, very patient in this market. And I know it can be very frustrating, and I've been there, trust me, that, you want to just close out your brokerage account, just go away, leave, and just come back in like a few months. But it's times like these where you have to kind of power through. It's when it gets bloody that you actually understand what it feels like, and it kind of builds the right mindset over the long term, right? This is not the first time we're seeing these pullbacks. This is not the last time. It's going to happen time and time again, but it's just something that we have to get comfortable with over time. NEO going back to 34.5. Let's take a look here. So NEO hovering around 36.50 here. So that right there is going to be 34. Yep, you're right. So 34.50 is going to be this level right here, the horizontal support that we talked about for NEO stock. Do you think GME will tank? I'm not sure about GameStop. I haven't been following GameStop or AMC at all. And I'm not sure where the short interest stands, or what the pattern looks like, what the volume looks like, or anything like that. So my analysis on GameStop would not be very helpful, so to speak. So ChargePoint I think ChargePoint has been pulling back as well with the broader markets. It's just been selling off. We've just been trading in like, we're just range bound in between those levels. So 1950 has been the support, 3185 has been kind of like the resistance for ChargePoint, and we're just like going back and forth, right? We pushed up, got rejected, sold off, pushed up, got rejected, sold off, pushed up, and right now we're seeing a little bit of a pullback, and we're just going back and forth in between that range, right? So those right there are going to be two levels to watch for ChargePoint. Augustine, Caddy, how do you speak so fast? I can speak really, really slow. It's just that when my videos get really long, I don't want to take too much of your guys' time, which is why I also try to provide the timestamps and make sure that it's the best use of your time, because time is most important, right? I'm trying to make sure that I respect your guys' time so that it kind of consolidates a lot of information in less time. But I can definitely try to slow down, but those videos will be a little bit longer, if that's okay. All right, let's take a look at SNDL. Oof. Sundial. So again, I haven't followed this stock very religiously, or like I'm not familiar with the fundamentals or what the valuations look like for this company. The best thing you guys can do, and I can actually go over this very, very quickly, is that if you guys want to go over to tradingview.com, right? That's the charting platform that I use, absolutely free. There's absolutely no reason why you want to sign up or pay for anything like this. All you have to do is go to tradingview.com, and this is the chart, all right? I've got tutorials, free tutorials on it on my YouTube channel. You guys can take a look at it. But if you were to come down, you come over here to more financials, right? This is very, very overview, basic level stuff. You can come over to more financials. You can go over to statistics. Get a good understanding on these ratios, right? We've got price to earnings, we've got price to sales, we've got price to cash flow, we've got some solvency ratios over here, so debt to assets, we got some margins, so net margins, gross margins, and we've got the income statement, right? So this gives you a good understanding on what the trend looks like for the revenues, the net profits, the net losses, and we've got the balance sheet, right? So if there's any stock that you guys are looking into, right, whether it's a long-term investment, whether it's a short-term day trade or swing trade or whatever that is, at least go over here, understand what the statistics look like, the balance sheet looks like, income statement looks like. And in my opinion, the things that I look forward to, like in any company, is that the balance sheet needs to be very strong. So total assets exceeding their total liabilities. Cash balance is going to be much, much higher than their total debt. And we're talking non-current total debt, longer-term debt. And then what their current assets over current liabilities look like, so the current ratios. If you look at come over here, statistics, price to earnings ratio, which is a very, very good measure of the valuation. You want to keep that price to earnings, depending on what industry it belongs to, at a reasonable level, right? Right now we're seeing multiple stocks, if not hundreds of stocks, that have P ratios over 100. So, they're way richly valued. And I'm a culprit of trading or investing in some of those companies. Like if you look at Tesla, right, trailing PE over 1,000, but I also look at the forward PE for the next 12 months, which is for Tesla, it's a little bit reasonable as their earnings are growing. But price to earnings is a great metric. Price to sales is a great metric. Right now for SNDL, for example, it's trading at 8 times sales. Very simple understanding is that they're trading at the market cap for the company is 8 times their total revenue. So if SNDL generates, let's say, $10 million in revenues, they're trading at $80 million market cap. That's just a hypothetical example, right? So again, we've seen Apple trade at 7 times sales, Amazon trade at 4 times sales, Tesla trades at well over 30 times sales. So we've seen those numbers kind of go back and forth depending on what industry they belong to. And the income statement, it's a very clear understanding, right? We want increasing revenues, and we want either net profits that are also increasing, or we want net losses that are shrinking for the company. So just based on that very simple analysis, I can already tell statistic-wise, price to earnings, SNDL doesn't have one. So that means it's not profitable yet. Price to sales is 8, which is reasonable. It's not too high. Balance sheet, total assets over total liabilities, so that's good. 231 million in total assets, liabilities sitting just under 20 million. So cash to debt is also very good. Let's take a look at income statements. That's where I'm a little, the net losses are increasing and revenues are also decreasing quarter over quarter. So then I'll kind of drill down, exactly why that is, what's going on with their operation expenses, what's going on with their cost of sales. And then you can kind of drill down industry-specific research, company-specific research, what are the catalysts, what does the management looks like, and all those different things to get a better understanding on the fundamentals and the actual underlying business. Because that's what's going to help you through times like these, is when every stock is selling off, is how high is your conviction in that stock. And if it's not to a point where you're going to be very excited to buy at these levels, then you're going to be more panicked to sell at these levels. Because if your stocks are selling off, like for example, AMD, super excited for it to retest $74. I'll be adding more shares at 74 because fundamentally underlying business is very strong in my opinion. Great management team, great balance sheet, strong guidance for 2021, increasing market share. In fact, they're actually gaining more market share from Intel in the cloud servers, data server business. But for SNDL, technical support is going to be sitting roughly at 71 cents. That's going to be the level to watch. And then fundamentally, you can kind of do your research as well. Pinterest has also been selling off pretty aggressively, right? So, every stock that we have looked at has been on a complete tear. Like, we're seeing a breakdown below the support of $65. Next level to watch for Pinterest is going to be sitting roughly at 53.50s. So that right there is going to be the level. All right, let's take a listen to this very quickly.
The brains, you could argue, behind the Pfizer-BioNTech vaccine, and this concern around what is happening, Alex, with the IP protection story. Mm-hmm. Earlier on in the day, BioNTech was down huge, and over the last few days, it's been down even more, quarter of its value. Starting to recover now on those headlines we're getting from Angela Merkel.
Yeah, let's get to that. Same thing with Moderna here in the U.S., now just up by 3%, was down 9% earlier. Angela Merkel says that she does oppose Biden's plan to waive coronavirus vaccine patents.
All right, we'll kind of come back to that. All right, let's take a look at the broader markets here. The S&P, all right, we're seeing a little bit of a recovery here. So the S&P is pushing up over 11 basis points now in the green, and the NASDAQ is also green now. So we are pushing higher a little bit. Guys, make sure that you guys drop a like. It really helps out the channel. Let's see if we can get to at least 200 likes. Really means the world to me. Helps out the channel and pushes the stream out to other people. So I would really appreciate that. So Peloton seeing a little bit of a bounce after yesterday. PayPal is also up over 1.5%, and that's kind of like been the trend. But everything else is just continuing to struggle. With Twilio down almost 10%. Twilio has seen a pretty severe sell-off. I think they had reported their earnings yesterday. Let's see if we can actually pull that up very quickly. All right, so Twilio reported Q1 adjusted earnings of 5 cents per share, down from 6 cents a year ago. Analysts polled by Capital IQ expected loss of 10 cents per share. So adjusted earnings of 5 cents per share, so they reported a profitable quarter, and analysts were expecting a loss of 10 cents per share. Sales rose to 590 million from 364 million a year ago. Analysts surveyed, they had it at 533, so they had a top line revenue beat, they had a bottom line EPS beat. In Q2, the company expects non-GAAP loss per share to range of 13 cents to 16 cents on sales between 591 and 601 million, which compares with the market projections compiled by IQ for a loss of 5 cents and 572 million. So they came in at a much higher than expected revenue guidance, much higher than expected EPS guidance, much higher than expected revenue beat and earnings beat. So that's a quadruple beat for Twilio. And we've seen that's been the trend for a lot of companies. Triple beat, quadruple beat for earnings, and they're just down 10%. But again, I mean, I'm sure there's more to that report than just those quadruple beats, but we have to really understand, what the metrics look like for specific companies. Like, for example, if I were to kind of show you guys my PayPal analysis that we did over the weekend. Here, let me take a look at this. So PayPal Q1 2021, the analysis was for the company. So again, if you guys want to get access to all of these reports in PDF files, they're going to be available over at our Patreon. But 377 million was kind of like the active accounts for PayPal. This right here was the TPV, the total payment volume. PayPal we're sitting at $936 billion, just shy of $1 trillion, 31% growth year over year in 2020, and the total transactions per active accounts were sitting at close to 40.9 in a given year as of 2020, and the revenue expectations in the first quarter was close to just shy of 5.9 billion, right? Just a little bit under $6 billion, and EPS of, let's take a look, of just over $1 per share. And yeah, that's about it. So that was kind of like my estimate. And let's take a look at what PayPal actually reported. So this right here is going to be PayPal's report. So we got EPS of 92 cents, quarterly non-GAAP EPS of $1.22. So they had a non-GAAP EPS beat. Total payment volume of 285 billion, growing at 50%. We had added 14.5 million net new active accounts in the quarter, and ended the quarter at 392 million active accounts. So from 372 in 2020 to 392. So that's an increase of what, 20, I want to say 19 or 18 million people. Quarterly revenue of 6.03 billion, so a little bit over my own guidance of 5.99 billion. So they came in much higher, growing 31%, 29% each respectively. And they expect fiscal 2021 revenues of 25.75 billion. I don't know if I actually had the 2021 guidance here. Let's take a look. So, all right, so revenue, all right, so estimates was 25.5 billion. EPS was $4.5, so $4.54 per share, and total payment volume of just over 1.1 trillion. So, yep, so fiscal 2021 earnings per share, $4.57. So just a little bit over my guidance here. So the actuals 457, and revenues came in actuals, or not actuals, the guidance, so to speak. That's the guidance. Just over, let's take a look. So, all right. All right, revenue expected to grow to 25.75 billion. That's the number that we're looking for. And TPV, yep, revenue over here, cash and cash equivalents, investments sitting at 19.1 billion as of March 2021. Zonkara, thank you so much for that. I really appreciate you. Thank you so much for your content, big man. You're definitely my favorite trader to learn from. Thank you so much. I really appreciate that. So yeah, PayPal is seeing a little bit of a bounce here from 243, 244 levels. We got a triple bottom here support. So you'll notice kind of like 3 days in a row, we've kind of validated 243. But intraday, we're seeing a little bit of a sell-off, right? At 255 resistance here. That should be the level that should be marked as a resistance. All right, let's take a look at Riot very quickly. So Riot, yep, definitely pulling back on. But I feel like crypto's been going up, right? Bitcoin was actually kind of hovering around those levels. Mark, we'll take a look at CRISPR right after this one, but the next support for Riot is going to be sitting roughly at $29, $30 a share. Again, this is more of a derivative because it's kind of priced against Bitcoin and where that trades, and you'll notice that Bitcoin over the last few days, it's just been going sideways, right? It hasn't really moved much. Although we did see some type of a negative divergence. We saw a pullback here. And then we saw some push higher, but right now we're still off the highs. And that's what's causing Riot to basically also sell off a little bit. So that right there is going to be the support at close to $29, $30 for Mara. For Mara, watch 20 at 30, like 20 at 40 levels. So this right here is going to be the level at close to $28. Again, previous resistance, support validated here. So that right there is going to be the level to watch. And this, of course, is a resistance that we're just continuing to kind of struggle at. NP, that's awesome. Congratulations to moving into crypto. That's great. You've probably done really well over the last 6 months, I want to say. So from November till right now. Alexander, everything's on sale. I couldn't agree more. All right, let's take a look at CRISPR here, CRSP. And again, we saw a huge breakdown, right? It was forming some type of an uptrending channel. We broke down below 112. The next support is going to be sitting at close to 90 at 50. Previous resistance is going to be validated support here if you do come down all the way to that level. And we're seeing a little bit of a breakdown from the MACD below the signal line, and the RSS also coming down aggressively as well. So that right there is going to be the next sort of support at close to 90 at 50-ish level. And 112 is going to be the resistance, because you'll notice that we got rejected at that level today. So the high for the day was 112.52. And we're going to continue to kind of see that weakness if the markets also pull back. All right, let's take a look at this one-day chart here. What's pushing higher? All right, so we got consumer staples. So we're really seeing like a move from energy, which was down like a lot as soon as the markets opened. So we sold off all the way down here. And we saw the biggest recovery for energies over here. Tech is now doing a little bit better on the day, so we're up over 72 basis points, just behind consumer staples. Communications is actually second. Tech is third, up over 62 basis points. Real estate is pushing up. Financials is in the green too, like over here. And then all these different value sectors, kind of like materials, we got industrial, utilities, and healthcare are just like in the middle, kind of flat, up over 2 basis points, down 5 basis points, kind of like back and forth. But we've seen the biggest recovery in energy intraday. And that's probably, we're seeing a recovery, guys. Do you guys want to keep this live stream going? We're probably seeing a recovery. Look at SPY. Look at the S&P 500. And we literally started the live stream 48 minutes ago. 48 minutes ago, it was 11 a.m. We've seen the live stream from 11 a.m. And the NASDAQ, look at the NASDAQ. We're seeing a push higher for the broader markets. Let's take a look at where those other stocks are trading. So PayPal is now up over 2%. There's more and more stocks that are turning green, which is good. So now we got Apple up close to 70 basis points, Amazon up almost 1%, Facebook is up over 1%. Let's take a look. So FNGU finally turning green, Nvidia is up, AMD is now flat. Netflix is at 495, so it did break down below 500, but 495 is going to be the next support level here. Tesla is down just about 1%, back over 664. The volatility is crazy right now. It traded all the way down to 650 and now back over 665. Square and Neo is kind of pushing higher, so we're now down close to 2%. And there's a lot of volume coming in as well, right? So unusually high volume on the S&P 500, so you'll notice that we did kind of trickle down here, and then a lot of volume kicked in right around, I want to say 11 over here, close to 11:20 a.m. is when we really started to see a volume spike. So we're talking 798,000 shares, 1.2 million shares, 1.27 million shares, over here 1.265 million. So collectively over the last, like, I want to say 25 minutes or close to 20 minutes, we've seen over 2.5 million shares traded for the SPYs. And the QQQs is a little bit lower volume, but we're still seeing a little bit of a push higher for the NASDAQ. All right, let's take a look at Zillow very quickly here. And Zillow, I feel like had a head and shoulders pattern here. So kind of like a neckline breakdown over here. So you'll notice that we were forming some type of a support at 125. So we had like a left shoulder, we had like a head, and we had a right shoulder over here. And then we saw a breakdown below this level. And usually this pattern is complete. And the next support to watch for Zillow is going to be sitting roughly over here at close to 111. The RSI is going to be oversold, the MACD is going to be oversold, so we could see some recovery here from Zillow. Again, the earnings were announced, so let's see if we can find some more information on the earnings, just on a brief overview level. So revenues of 1.2 billion. So Tuesday reported net income of 52 million in Q1 compared with a net loss of 163 million a year earlier. Analysts expected net income to be 13.5 million. So we got revenue beat. Revenue grew 8% to 1.22 billion from a year ago, top in 1.1 billion estimate. So revenue beat, EPS beat. Let's take a look at if they provided any future guidance. And housing is really strong. You know, Zillow, companies like Zillow, Redfin, Opendoor, like they should be doing really well. Because housing has been really strong over the last few months. But again, to what extent is that priced in, and what does the future look like for the real estate market? But nonetheless, revenue beat, EPS beat, and we're seeing a little bit of a push higher for Zillow as well. So again, I could see some recovery here for Zillow moving forward, right? RSI sold off, MACD sold off as well, and the head and shoulders pattern is also kind of breaking down. So expect some recovery here from this stock moving forward. Max, thank you so much. I really appreciate that. Let's take a look at VYGVF. That's going to be Voyager Digital, I believe. So we did see some type of a breakdown here after the negative divergence from Voyager. So this right here were the lower highs, the higher highs. So again, bearish divergence here. We saw a pullback for Voyager Digital of close to 50%. And it's weird because this drop doesn't look like 50%, right? It seems like, oh, it's going to be nothing, 10% drop. But it is actually a 50% drop from $30 to, what was it, $14.86. So that was a pretty significant drop. And right now we're seeing a little bit of a pullback here. And the MACD also looking to cross over the signal line, the RSI also pushing higher. I think this stock is also kind of backed or very heavily traded against Bitcoin because I think they're very similar to Coinbase, right? So they engage in the development of commercialization of digital platform, focuses on enabling users to buy and sell digital assets. So again, crypto is going to be the big piece here for a lot of stocks. And that's why I'm kind of, you know, unless Bitcoin's volatility kind of stabilizes, I'm somewhat against companies investing heavily into Bitcoin. Like, it's okay for them to park some of their cash on the balance sheet, like Tesla did, a very small percentage of their total market cap and the balance sheet into Bitcoin. But I wouldn't be very interested in investing in a company that is investing heavily in Bitcoin unless Bitcoin's price kind of stabilizes, because then, you know, the stock price becomes a derivative. Then what happens is, you know, it's not trading on the company's fundamental, but rather it's trading on Bitcoin's fundamentals and the value and the price action there. So that becomes a little frustrating in my opinion. So, and I feel like Bitcoin's volatility is also kind of stabilizing, right? Because the focus has kind of shifted on the crypto market from, you know, from Bitcoin, and even some of those other traditional, like Ether has been going up aggressively, like up to 3,500. This is crazy. 1.2%, and then Doge is all at 60 cents as well, right? So absolutely incredible moves here from cryptos, you know, Ether and Doge. definitely pushing higher. And I think Doge's market cap is now like 4th biggest in the world for the coin. I think just shy of, I think it was Binance or something. And of course, Ether and Bitcoin kind of holding up the top 2 spots. But it's only a matter of time. I feel like Doge is going to be like in the top 3 if it hits $1, like after the Saturday event. Harry, yeah, I agree. Like Bitcoin's has kind of stabilized with this shift away, like from attention and focus over to other coins. It's kind of like the volatility has stabilized a little bit. So that's good. That's what we want. We don't want, if Bitcoin is going to be the future, if it's going to be, if there's any chance for cryptos to actually, and more specifically Bitcoin, to become like a currency or a store of value, it needs to kind of bring that beta down. It needs to bring that volatility down, so that we can actually, it can be used in a lot of applications, right? So for Voyager, I could see some more upside here, just based on the fact that, you know, we saw 50% drawdown here, the RSI, the MACD. The MACD is now starting to kind of cross over the signal line, but keep a close eye at this support for Voyager at close to 1830. That's going to be a support kind of validated here. We validated that support here as well, coming in from April 29th. So that's kind of like the level to watch, you know, intraday. And right now, just watch if you do see kind of like a lower high being formed, or if you do see a successful breakout over that level. Because that could also be like, if I were to extend this, that could also lead to some lower highs and lower lows, right? That could lead to a downtrending channel, which is going to lead to something like, you know, lower highs, lower lows, boom, boom, boom. We kind of go back and forth here. But we don't want that, right? We want kind of like this support to get validated right here at close to 1830 for Voyager before making the next leg up higher and a breakout over this resistance of over $24 per share. All right, let's take a look at Uber. I think Uber was reporting their earnings too. Oof. Oh. It's like every stock that we look at, there's a much higher probability that it's going to be down, and it's going to be down by a lot, right? It's a very small chance that we pull up a stock right now on the charts and it's up. All right, let's take a look at Uber's results. Quarterly loss of 6 cents per share here. Quarterly gross bookings 19.54 billion versus 15.78 billion. Year over year. Quarterly trips 1.45 billion versus 1.66, and that was I want to say that was expected because of the lockdowns. People are not traveling as much. Q1 earnings per share view negative 54 cents. Revenue view 3.929 billion. All right, so revenue slides, but net loss shrinks. So said Wednesday the Q1 attributable net loss 6 cents per share compared with a net loss of $1.70 per share year over year. Analyst surveyed has expected net losses of 55 cents, so huge EPS beat. But revenue totaled 2.9 billion, down from 3.25 billion. Analysts expected 3.26. So definitely, I mean, a revenue beat, and the market is going to punish any stock in this environment if we're seeing a revenue beat, or revenue miss, so to speak. I'm sorry, revenue miss. But again, I mean, this was kind of like a stock that was affected, right, by the lockdowns, and it's going to be same as Airbnb, right? Airbnb, Uber, as the economy reopens back up, we fully expect them to have more sales, more user interaction with their services. As people start traveling again, they start kind of moving around, commuting to work, commuting to different workplaces, whatever the case is. We could see year-over-year comps get better over time as the economy reopens back up. Now, with these companies being so international, with Airbnb also like in the United States, I believe it's also in India, and then Uber is, most certainly in India, and it's also in the US, we're seeing kind of like a, mix over here, because the US is getting much better with the reopening of the economy, the vaccinations, the pandemic coming to an end, fortunately, so that's good. But in India, things are going in the opposite direction. So, we're just starting to hit over 400,000 cases, right? People are going into lockdowns once again. We're seeing like a national emergency situation, unfortunately, here once again. So, again, those revenues for Uber and Airbnb, companies like those that benefit from reopening of the world, are not going to see substantial increases right away, but they're going to see it periodically, quarter over quarter. Again, that's just my opinion. I would love to hear what you guys think about these companies too. Tom, that's a great question, and you know that why. So Tom is asking why all the companies that show quarter results are down significantly the next week or day. It's just the market right now is very risk averse, meaning that we're seeing this risk off moment where people want to grab onto any profits they can get. So for example, Amazon, after they reported their earnings, after hours was trading at levels we've never seen before at as high as 3,600. So let me pull up Amazon's chart, and you'll notice that, you know, after hours, as soon as they reported their earnings, you know, they pushed up all the way to highs of $3,663. So this right here was a huge run up. Let me see if I can go over to the 30-minute chart. So look at this pop right after the earnings, right? So this right here, we were trading at 34.54, massive push higher over 6%, $215 per share. And then what happened? It kind of rolled over, right? So we saw a lot of profit taking, and then boom, just continuing to sell off. So Mike, profits, what profits? I mean, profits right here. Amazon's trading at 3,600, right? $3,663. It's never traded at these levels before, ever. So when a stock hits a new all-time high, you have to understand the profit breakdown, the cost breakdown. It comes down to a point where almost all 100% of investors are profitable, right? So remember on Webull, when we look at this chart that shows the profit breakdown or like the cost breakdown for each company and how many investors are profitable. So actually, let me pull that up very quickly, see if I can do that. What stock, comment one stock that you guys would like me to look into in terms of the cost breakdown. So we can take a look at it very quickly. One stock, comment one stock that you guys want me to look into very quickly in terms of the cost breakdown. We'll just kind of go over, you know, what the cost looks like. Hopefully this works. All right, Palantir. We're gonna look at Palantir here very quickly. So it's gonna be a good example. By the way, if you guys want to get access to this Webull application, the link is going to be down. It's actually pinned over here. All right, so let's take a look at Palantir here. So it's going to be all the way down because it's down over 5%. All right, it's right there. So Palantir, you click on that, and then you come down to the analysis, right? So it's going to be this right here, the analysis tab. And you click on this and you come down, right? So they show you like a lot of different things, right? They show you analyst ratings, you know, what does that look like? So buy, sell ratings, price targets over here. And you come down, this is the cost breakdown. And this is pretty crazy for Palantir. Like, this is crazy. Just look at this. The average cost for all Palantir investors sitting at $24.94. Let me actually take a screenshot so I can basically address what I'm talking about. So we're gonna go over here, we're gonna take a screenshot of this. Close this application out. I'm gonna save this. Just 1 second. All right, we're gonna open that up. All right, so this is it. This is what we are looking at, right? So this is Palantir. Yesterday's close was 21.15. So we're looking at this closing price. The average cost sits at $24.94, right? And you'll notice over here, profitable shares. So you'll notice total profited shares proportion, 0.72%. That basically means that less than 1% of current investors, all investors in Palantir, all investors, this is including ARK Invest, this is including everybody, 0.72% are currently profitable on Palantir as an investment. And you'll notice a lot of volume coming in at these levels, right? So we're looking at $21, $29, like somewhere in between this, so much volume coming in at these levels. But none of this is important because Palantir is down so much. It's trading as low as 20 now. It's think it's still trading below 19. It's back over $20, but that's kind of like the whole breakdown. And once they push up, like Amazon, we saw a breakout over 3,600, new all-time highs. We're seeing the tendency for people to kind of lock in profits because there's a lot of uncertainty in the markets in the future, right? Harry, yeah, I'm right with you. 24.25, that's kind of like around my cost basis too, and Palantir continues to kind of struggle around $20, $21. And this is something that we talked about in our previous videos, right? The reason why Palantir is not going to do well just yet is, first of all, their earnings next week, May 11th, is going to be huge for the company. We're going to find out more about how they actually do. And then if we can get some re-ratings and price upgrades on Wall Street's part. Because to move a $37 billion market cap, we need a lot of inflows of capital. And guess who's got the money? It's got the hedge funds. It's the big money, right? That's what needs to flow in to actually move the stock. And unfortunate as this is, and of course our perception of Wall Street and the suits and what their tactics and the things they deploy into the markets, regardless of what that is, they're the ones who actually move the market. That's just plain and simple. When we see stocks like big tech move up, it's because there's a lot of inflow from institutional investors. All right, let's listen in on this very quickly.
1%. Right now, about flat, actually down. So down for a fifth day in a row, just fractionally at this point. That's the longest losing streak since October of last year. And it comes on this continuation, these concerns around the possibility of inflation. Not so long ago, it was all about reflation, healthy reflation that will stimulate the economy and that we're looking at this reopening trade. Now we have these fears around inflation because commodities have just been on fire. And you do have some Fed officials stoking the fire a little bit, talking about the possibility that inflation could be higher than expected, sooner than expected by some market participants, and that tapering could be appropriate at some point soon. So earlier today, stocks selling off a little bit on that. Interestingly, David, earlier, yields had been higher, but on some of those, I guess you would call them hawkish comments, you saw yields come in, almost a safety play, and now yields are about flat.
Well, that's what I was going to say. I'm a little curious about the 10-year yield here, because if we're really concerned about inflation, I would be expected to see that yield keep going up. It's not really doing that.
It's not doing that right now at all. Some are looking at the 5-year break even, saying that that's a big tell on inflation. And again, commodity pricing sharply higher. A lot of traders saying that as you have commodities going higher, not so long ago, the Bloomberg commodity at its highest level since 2011. I believe iron ore today hit a record high, copper above 10,000 not so long ago, that is going to translate into nominal yields moving higher soon. So that perhaps we will see that 10-year yield above 2% sooner rather than later. It's just this expectation. It's almost as though investors are preparing for a big storm before we really have it here. Whether or not the storm is going to arrive is to be told, but we certainly are seeing it in some real life pricing and commodities, David.
Okay, Abigail, thank you so much for that report on the markets. That's Abigail Doolittle. As we wait for SEC Chairman Gensler to begin his testimony, we welcome now a former SEC Chairman. He's Harvey Pitt, now CEO of Colorama Partners. So, Harvey, thank you so much for being back with us. We have the prepared remarks from Gary Gensler. Give us a sense of what you think the high points are. What are the important points he's going to hit?
Well, I think the high points are that the testimony is written rather deftly. He talks about a lot of the issues.
So, what do you guys think? Yields over 2%? Or we're just going to struggle at 1.75, 1.8%? So if I were to kind of bring up our chart number 2, let's take a look. Weekly chart here. So it's going to be, the yields. So right now we're again just getting a little bit of a rejection here at close to, I want to say 1.75 levels. Again, previous support resistance here. Ooh, this is also a really good chart. I like this chart that we constructed as well. That basically goes over all like different EV stocks. And anything down here is in the red. And of course, everything over that line. So that you guys see 0% over here. So boom, right here. So I also want to mention that, you know, with the Fed funds rate, the expectation that there's going to be an increased rate hike, that is also a lot of FUD in the markets, because historically we've also seen both the interest rates and the markets go up. So I really don't understand why the market is fearful of rates going up. There's going to be some quantitative tightening in the future. Like, we just have to come on board with this idea that over the last year, maybe year and a half, there's been a lot of QE. There's been a lot of liquidity. There's been a lot of buying of asset prices being elevated. But over time, we are going to see some quantitative tightening. We're not going to see this like inexpensive money floating around, right? Interest rates at our record lows. We are going to see that go up. But that doesn't mean that the stock market is going to act in an inverse relationship. We've seen historically that both things can go up and have gone up in the past, both at the same time. So temporary, that's why it's like a buying opportunity in my opinion. That's why these stocks, when they come down, they're coming down on very short-sighted fear about inflation and interest rates, when over the longer term, if you look at the bigger picture, they're the perfect hedge against inflation. Like, if you want to look for returns, of course, if you keep cash, you're losing that to inflation year over year, right? Depending on what that runs at, 2%, 3%, whatever it is. But what else are you going to invest in, right? You're going to only invest in companies that generate that positive cash flow, that are growing at a much faster rate than inflation, so that you can grow your money with it. So that's why, you know, stocks even then become like there's no other alternative, like Tina, where you are investing in stocks to beat inflation, so to speak. Now, there's a whole other debate as to, you know, how much longer term returns are you going to see versus the past 50 years versus the next 50 years. But that's for a different video as well. All right, can you tell us about your opinion about adding cash into this market? Any tips that you can give? So right now, again, I'm just observing at the moment. I'm just trying to wait and feel out where the NASDAQ and the S&P goes, if there's any more room to the downside for the NASDAQ. And the S&P, NASDAQ at 13,000, the S&P at close to 4,000 points. So I'm not adding any more specifically for the broader markets or some of those big tech stocks. But if those individual stocks like NEO or Palantir, like they continue to kind of sell off aggressively, then I'll be more inclined to kind of adding more to my positions. But it's kind of like, it's very simple. As the markets move up to new all-time highs, my cash exposure also moves up, because the risk reward gets skewed. There's more downside risk than there's upside left in the markets. As the markets move down, the cash exposure should also, in my opinion, come down, meaning that you're deploying more and more into the markets, you're buying more. So it's very simple. As the market moves up, risk moves up, and your cash exposure also moves up. As the market comes down, your risk comes down and your cash exposure comes down. So I hope that makes sense. Analyst DCF is not based on low interest rate. You're right. So it's not based like the risk-free rate. If you were to kind of plug that in, the weighted average cost of capital also changes, which basically discounts the future cash flow at a different value. But even then, like companies that are generating a lot of cash flow in the future, like I strongly believe big tech in 10 years from now is going to be super, like their margins are going to go up exponentially. And the reason is because right now we're seeing an ecosystem being built for these companies, right? They're building that ecosystem. That's the same case for electric vehicle companies like NEO and Tesla. You know, you look at Amazon, you look at Apple, they're building that ecosystem. Like 10 years from now, their margins are going to expand when they move their business models from hardware to services, right? Amazon, not so much that they sell hardwares, but their margins are so low with their core retail business. But as they move towards cloud and other services, their margins are going to skyrocket, in my opinion, over the long term. So their multiples are going to increase, their cash flows are going to increase, their profitability will expand, which will drive those stocks to new highs, in my opinion. And right now, I feel like it's very, very short-term weakness on the stock is what we're seeing. But all right, so let's take a look at so Corsair Gaming is also down after great earnings yesterday, so we're down a little bit over 3.75%. So growth stocks are over until September. You are absolutely right, and you could be right about that, and I'm completely fine patiently waiting because my time horizon is not till September or till next week. It's much far out. Coinbase is around 250. Oof. Selling off pretty aggressively. Down about 5% here. I also want to mention that they actually had a direct listing, so they didn't have like a traditional IPO, they had like a DPO, so to speak, like a direct public offering. So, you know, when insiders were selling, they're supposed to sell for other people to buy the stock. Because if they don't, like how are they gonna do their direct listing? Because in a direct listing, you're not raising any more shares to raise capital. You're basically selling existing shares to basically take your company public and for it to be traded in the public markets. So, and the same case with Palantir too. Like insiders selling is a huge criticism for Palantir stock, which is very like crazy because it's supposed to happen like in a direct listing, and they could be selling at a multitude of different reasons, right? It could be because of tax reasons, automatic sales buys that we've seen, you know, they execute those orders right away automatically. They don't even pick the date or the time to basically sell those shares. So it's very automatic in that nature. So gold is now up over 1,800, up over 1.65% here. Thank you so much. I really appreciate that. I really appreciate your kind message here. They're taking it down anyway. Yeah, for Apple, here, like I'm a little, you know, I'm a little concerned about their Epic versus Apple lawsuit. Like we broke it down in one of our previous videos, and I'm kind of like day 2 and day 3 is in the books. So I'll kind of break down, you know, what that looks like and what Judge Rogers is basically kind of contemplating right now. But that is a pretty big trial for Apple. Like if they were to see any disappointment or any change in their business practices, so to speak, and how they run their app store, then it's going to be a little bit of trouble for Apple's valuation. But I don't see that happening. But again, you never know with these trials, right? Microsoft 20 years ago also saw that go against them, which basically paved the way for Google to come into the business and thrive. Otherwise, Microsoft would have been like a monopoly in this space. And the reason they're not is because Netscape had the trial 20 years ago and they basically lost, right? Microsoft lost. So NDX is stalling out. Yep, so we're seeing a little bit of a pullback after being green. NASDAQ is up over 30. Actually, that's not a good representation. Let's take a look at IXIC. Yeah, so the NASDAQ is down a little bit over 10 basis points here. And the yields are also down 11 basis points, and the S&P is up close to 26 basis points. So again, value cyclical is pushing higher. That's going to be this chart. And you'll notice tech and energy is up. And we got healthcare down by a lot. And all these value sectors like real estate, all those sectors kind of like in flat, right? This right here is our safe haven when it comes to like, it's more of our Bible, right? This is when we look at the S&P 500 breakdown and what's driving the markets higher or lower and where the money's flowing to. Because you go back 1 year, you look at which sectors have performed really well. It's financials, industrials, and materials. As crazy as it is, tech is in the middle, up over 44%, but all these other sectors, financials, industrials, and materials, because that's going to be ticker symbol XLB, that's a materials index, up 64%, 67%. Energy is up over 34% over the last 1 year. We're coming in from May 2020. May 2020, guys. So if you think that 2020 was all about tech, think again, because, well, 2020 was about tech. If you think the last 1 year was about tech, think again, because from May 2020 till May 2021, we're seeing financials, industrials, and materials are really skyrocketing. And again, congratulations to anyone who's taken opportunity of this, right? There's great opportunity to be found in the value and cyclical side of the trade too. Up 67% with lower volatility, lower risk that you can actually take a look. But over the last 6 months, again, tech has been kind of stalling. It's up over 14%, whereas energy financials up by a lot. All right, let's take a look at Coinbase very quickly. So there's no like an analysis here, so to speak, because again, we're seeing a little bit of a pullback. The RSI is very oversold. The MACD has been aggressively selling off. We still need Coinbase to kind of establish some type of a support here before we can really understand, where the buyers and sellers kind of decide where that support is going to be. But again, we're seeing aggressive pull downs here for Coinbase. All right, let's take a look at Li Auto. Li Auto's also been on this aggressive. Let's take a look at EV stocks. EV and some legacy auto manufacturers. So Toyota's up over 2%, almost 2.5% to $78. GM is also up close to 1%. We've got Ford, that's pretty much in the green, up over 34 basis points. We got Nikola outperforming the entire EV sector. Nikola is outperforming today. Hyliion is also outperforming today, up over 22 basis points. But then we got Volkswagen, that's down a little bit. We got CCIV, that's down. Tesla down over 1%. Charge points a little bit over 2.5%. NIO's down over 2.7. Mark, I couldn't agree more. Yes, you're absolutely right. Because, in my opinion, I am a lot more comfortable with App Store's privacy and security as I would be with if I'm dealing with a third party in terms of those payments and transactions. At least with Apple's App Store, once I have the payment info there, they take care of everything, and they've got that security kind of backdrop to make sure that it's not getting, jeopardized, like my information is not getting jeopardized. And again, that's just my opinion. Again, there's always two sides to the story, but in terms of privacy and security, I feel a lot more comfortable with Apple's App Store and the regulations that they have in place and the policies that they have in place versus dealing with a third party every time, if I want to do those in-app purchases. So Li Auto is down close to 4% here, down to $18. But again, these EV stocks, they're just, 2020 has just been a really painful year for them. For Li Auto more specifically, since November 2020, it's just been straight up red. XPeng down close to 3.9. Lordstown Motors now down to $8 a share. Brutal. Like, we're down below our SPAC price for Lordstown Motors. Had a triple top here for Lordstown, close to 31.86. We're down close to 74%. Harry, thank you so much. I really appreciate that. Thank you again, and I'm glad you enjoy the charts and the analysis as always. Let's take a look if there's get a relief and get some rest. Yes, I will be getting some rest very, very soon. It's a little bit past 9:30 p.m. here. But thanks again. I really appreciate you. All right, let's take a look at Etsy here. But EV stocks, apart from some of them, I'm really bullish on NIO and Tesla. Those are the two companies that I consistently follow on a daily basis, religiously, kind of do a lot of research and analysis on. XPeng, Li Auto, I do some analysis on them because there's a lot of people that want to see the analysis on those companies. But other than that, I haven't really understood the business models for Lordstown or Nikola and CCIV. Those are and Hyliion. Those are four companies that I haven't really studied. I did back then. I didn't really found them to be too interesting. But that doesn't mean that they're great companies, right? They could be doing incredibly well fundamentally, and technically they're just not reflecting that. But over the long term, kind of everything will reach some type of equilibrium, because right now we may have over 1,000 electric vehicle companies. Over time, we're going to see that consolidate. That entire industry is going to consolidate, and that's just how market cycles work, right? It's just going to be only a few players, a handful of players, 4 or 5 players that are going to dominate the industry when it comes to electric vehicles. And my money is on Tesla and Neo. That's just kind of like my opinion. All right, let's take a look at Etsy. Jack, this right here, the website that I'm using is TradingView. The link is going to be down in the description if you want to get started with TradingView for absolutely free. And this other software is going to be Webull, that I also use on a regular basis. That's also going to be down in the description below. Both of them are going to be available, and they're absolutely free to use. So, they've got a lot of market data available. Both of them have their pros and cons, but I personally prefer TradingView because they've got an abundance of features and research and analysis and a lot of things that you can look at. But Etsy, let's take a look at their earnings here very quickly. So Etsy Q1 results rise from a year earlier, sets Q2 outlook. So Wednesday posted net income of $1 per share, rising from 10 cents per share earlier. So that's what, like a 1,000% increase. Beating analyst estimates of 92 cents. So we got the EPS beat. Revenue jumped to $550 million from $220 million. So that's going to be just about 100% increase year over year, exceeding $530 million estimates. So we got a revenue beat. So far, as much as we've read, we've got the revenue beat, we've got the EPS beat. Gross merchandise volume at $3.1 billion, up 132%. For Q2, the company expects revenue just shy of $500 million, $493 to $536 million, and EBITDA of $129 to $144 million, against street estimate of $493 million revenue. So they came in at the higher guidance for revenue. The current quarter revenue beat and EPS beat, and Etsy also forecasts gross merchandise volume up 2.8 to 3.1 billion for the quarter. So they had a triple beat, and the stock is down how much? 14%. Wow. And again, like, to all fairness, I mean, we just read on a surface level, right, what's going on with the revenue, the EPS, the guidance, but we also have to understand like the individual metrics specific to those companies, because with these tech companies, it's a whole it's like a whole job to just cover one company, because there's so many different metrics that they report. Like Fiverr, for example, will report stats like their take rate and the average spend per buyer, right? PayPal reports things like total payment volume, or they've got new additions, the active accounts. We got Netflix that reports like active subscribers, total paid subscribers, average spend per day in terms of their content, and Netflix. So those are all different stats that we need to really understand what the growth looks like. Are they moving in the right direction? So investors always kind of price in like the revenue, the EPS figures are kind of like, just out there, but it's a lot deeper analysis, that Wall Street does, and they just decide, on the fly, whether it's a sell or a buy. And then they just like make those quick decisions, and the volume spikes. And companies like Amazon and all those companies, they can give you like picture perfect earnings, and they'll still sell off. They'll still, spike after hours, and then there'll be a lot of profit taking for those companies. So the next support to watch for Etsy is going to be sitting roughly at 155, I want to say. Previous resistance here. Support, like I actually would not be, I'd be more inclined to kind of buying at these levels. I mean, I'll take a look at the earnings in more detail. I kind of drill that down, and if it's something that is really oversold, I'll definitely start a new position in this, because the RSI, the MACD is very, very oversold, trading below 25 levels. The MACD has been aggressively selling off as well. So we're seeing that across the board for a lot of stocks. Like just today, we've covered, I want to say like 4 or 5 stocks that had revenue beat, EPS beat, strong future guidance, and they're down like double digits, right? Etsy was one. There were a few more stocks that we covered that had like triple beat, quadruple beats, and they are down right after the earnings. Peloton was one yesterday. Actually, they did have a recall. I think they're reporting their earnings today. Peloton is reporting their earnings after the close today, right? I feel like they are. And then you get these stupid lawsuits that are so frustrating if you're long a company. Like if you're long Peloton, like this is so annoying. Like all these lawsuits that are like on the company for no reason. Some of them have legitimate claims, no, don't get me wrong, but some of them are just there to like literally for short sellers to take profits when the stock kind of slides over 10-15%. Wow, that's pretty cool. The buffering emoji that you had. Let's take a look at NEO. Down a little bit over 2%. Let's take a look at Unity Software. I think Unity Software is kind of facing the same issues as Epic Games with Apple's kind of App Store policies. And this is also a stock that's kind of had like a triple bottom here at close to $89, $90. So boom, right there. That's going to be the level to watch at roughly $90 for Unity Software. Now this is also a company that's come down like aggressively. So, I mean, that right there is going to be the support level. Let's take a look at the RSI and the MACD here. So again, we're coming down to an oversold level. The MACD just had a little bit of a cross down below the signal line. So keep a close eye at 90 as a support, and a resistance is going to stay put at close to these levels at close to $104, $105 per share, because we're just consistently finding resistance here, boom, 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 like a double, triple top resistance for the company. Spotify is also down over 2.5%. They reported earnings, I think, a few days ago. For Spotify, they did see some decelerating growth, actually. Let's take a look. That right there is another like Apple and Spotify. They're just competing over something. Antitrust in EU. All right, so NDX is high of day here. It's up over 11 basis points. Oh, there we go. We are seeing a push higher, and the S&P is also up over 41 basis points. So we're seeing a recovery here, guys. Unfortunately, I am gonna cut the live stream here, but definitely I will be putting out updates on the broader markets and Tesla and NEO and AMD and a lot of other stocks like early in the morning, right after the markets close. So I hope you guys enjoy this live stream. We try to do this like almost every other day, and you know, we cover a lot of different charts like these. Like these are all accessible to everyone over at Patreon. So I will be updating a lot of different charts. So they will be available to you guys. That will automatically sync every time I make those changes. So you guys have access to them. You'll also get access to the private Discord and a lot of other features if you want to become part of our Patreon. Again, you don't have to, but I really do appreciate you guys' support as it is. Make sure that you guys drop a like. It really helps out the channel. And if you want to get 2 free stocks with Webull, the link is going to be down in the description below as well. And this right here is going to be TradingView. That's the platform that I use, absolutely free. If you guys want to get access to this, again, the link is going to be down in the description. So I thank you so much for joining in. The markets are green. My job here is done. So I hope you guys have a great day and a great evening. And again, we'll maybe do this tomorrow or a couple days, you know, over the weekend or next week as well. Stay strong. Again, this is a market that goes up and it goes down, so it's nothing new here. It's very normal, and you know, the markets will play with your emotions, but all we can do is kind of have a longer-term outlook, invest in companies that we genuinely want to own. Like I personally want to be an owner, part owner at AMD. I want to be a part owner at Tesla, right? I want to be a part owner in these companies. So that's kind of like the mindset that we're developing that's going to help everyone over the long term. Like, trust me, it's always easier to be enticed by these short-term profits and quick gains, but you have to ask yourself if this is a consistent strategy that's going to build wealth over long term, right? And it's only going to come with the right mindset. And that's what we're trying to do here. It's like, invest in great companies that have great fundamentals, strong balance sheets that are going to survive and thrive through thick and thin, and I'll be there to kind of support them as much as I can. So thank you so much for your guys' time. I really appreciate you guys, and thanks so much for the support. Subscribe if you're new to the channel here, and as always, happy investing. I will see you guys in the next live stream. Have a great day, and take care, stay safe.